boys? Hope everyone's had a good day. It's a bit quiet in the market. There was a little bit of action from the RBA. Very much as expected, did not raise rates. And we'll be waiting to see the next inflation data at least, and also any action from the Fed before they do anything next. I think it's unlikely to cut again. I mean, obviously, if these Q3 inflation numbers come in a little bit weak, then you might see them cut in November, but that'll be about the only time they're going to cut again. So, look, I don't think the Aussie is going to get out of control here, but grinding higher is its natural state, and so potentially we're going to get to 77 in the coming week. Not a fast rally though. The main trade I'm looking at is the pound, of course. So we've been talking about this for a while. Okay, the number came in very strong. We got a reversal, got a test of support, came back up. We're grinding high on the pound. I think there's a little bit of concern about that next leg higher. All right, so the next leg's very important for this rally. I'm still pretty adamant we're going to get that. It's just the market needs potentially to go sideways for a little bit, work out a little of the recent rally, so just get a little bit less overbought short term, and then we can push high above that 134. Once we get above 134, the move towards 138 and above those pre-Brexit highs is pretty likely, especially if data continues to come out super strong. All right, it's just very hard for a pair not to rally in those scenarios. Also, next week on Thursday we got the BOE, and I think that will be a catalyst for further rally. I don't see how they can come out and be dovish when they've been there's such a strong rally, such a rebound in some of that data. So, in terms of us getting further along, look, you don't have to. You can just wait and see if the market breaks above 134, then hop on with the momentum. But the pair is showing all the signs that you want to see, apart from breaking high. The pullback's very small. I mean, that's barely even threatened the buyers there. So if you held that, I mean, the sellers are more concerned. And sometimes you have to ask yourself that question, right? I mean, not sometimes, all the time. Who's more worried in the market right now, shorts or longs? Definitely the shorts. The shorts, I mean, if you're short at 131, you're like, am I getting out of this? Where are you going, pound? Is there some negative news? I thought the Brexit, the UK was going to fall apart. So, the shorts are definitely worried. I think it's just a matter of time. Longs are seeming like, we're just having a breather. We can wait here for a bit of weak US data, maybe get the market, get the rally going. On the point of the US data, because it was a holiday yesterday in the US, the PMI for the services PMI for the US is coming out tonight. Relatively important, especially given that there is still some people out there who believe the Fed will raise rates in September, making the case that they should have already gone and it's better to go early. I'm more in the camp that the Fed's not signal sharp enough that the market wants to rally, and they've made it very clear they don't want to shock the market. Therefore, if they don't want to shock the market, they can't raise in September. Now, they can be very hawkish in September. All right, they can be extremely hawkish, but at the end of the day, they didn't raise rates. So they can signal all they want that they're going to raise in December, and the market can start to price that in later on, maybe even rally a couple hundred pips on that day, but net effect a month later, I think the US dollar will be weaker than it is at going into the FOMC meeting. The legitimacy problem of the Fed is real. If they lose that, then the chances of a serious US dollar sell-off grow, and the more economists, the more market callers suggest that the Fed's scared to raise, the more the market might pressure the Fed into raising, and it's actually easier for the Fed to raise rates if the US dollar is weak. So what do I mean by that? In terms of the global currency war that's going on, every major country wants a weak currency. Euro wants a weak currency. UK definitely, Carney definitely wants a weak currency. Japan wants that weak currency. And so if we can get a situation where the US dollar weakens significantly, say euro to 117 to 120, pound back to 140, Aussie towards 80, any sort of effect of raising rates to the global economy will sort of be mitigated, even if the market reverses a fair bit of those gains. Say they look like they're going to raise in December, maybe back it up with another rate hike in March 2017 or something like this. And the US dollar starts to strengthen, then it might just go back to those previous levels that we've been to. So it's it makes more sense for the Fed to be wanting to raise rates from a position of US dollar weakness. So that's another consideration to put into the back of your head here about why September probably isn't going to happen, and also why they would allow sort of rally against the US dollar. And that's going to help the pound trade, obviously. That's just a side note on that trade. In terms of major news this week, nothing really. There is a little bit of speculation the ECB might do something. I don't think so. Alright, I don't think there's been enough weakness there, and there's not enough hype. I mean, they really got to hype it up, right, to get the market moving, and I don't see that there currently. So the euro is more beckoning, at the US dollar feet right now, and so it's really just, I mean, it's the most boring pair in the market. You remember when I was getting super excited that we're going to break that outside to the top side, and like, come on, let's get something. It was too early, and Yellen put a cap on it, and it's like, well, okay, we can just sideways trade for a little while. No volatility is actually good for countries too, currency volatility, and so the lack of volatility we're getting is terrible for us, terrible for us traders. I mean, look at the daily here on the Aussie. I mean, that's crazy tight. And we used to rally like that. This would be a month, not 3 months. So I don't know. It's not good for the trend traders. It's not good for theme traders. If there's no big story that makes sense, it's hard to get excited for me anyway as a trader. And we might just be waiting, right? Waiting for that story to develop. So the only thing I can see developing here is that the pound recovery trade. It's starting to get some coverage. It's starting to get some coverage in the banks, and we're going to have a look at some of that, some of those news releases. Obviously, now that you've had all the PMI data come in strong, you got these guys coming out with these reports saying, "No, the pound's going to recover to 140." Yeah. Maybe they're watching the Forex signal stream. Nah, it's pretty obvious. It's going to become a common idea in the market. And this is what helps it later rally from, say, 135 to 138, is it becomes a dominant story and something people can believe in, and something technical traders can hop on. Technical traders are a little cautious right now. Right? They're just waiting for resistances to break and for it to become a full-blown recovery. I did say that we were looking to buy the pound against some other pairs. Now, we have bought it against the euro as a main way of playing. Pound Swiss, though, is similar to the pound and potentially has more room to move. Pound Yen is the most dangerous way, given that any sort of dollar sell-off that we're talking about would hurt the dollar yen, and the dollar yen has to be part of a pound yen rally. If you just got the pound moving by itself and the dollar yen going the other way, that doesn't help. In fact, the pound and the dollar yen, when they move together, are a very potent pair. And you've seen that many times in the past. Those 600-point moves. You got a little bit of that last week, 133 to 138. So we're settling down a little bit, but next leg up makes sense. Especially if the BOJ delivers on their anticipation. There's hype about the BOJ. There's no hype about the ECB. There's no hype about the BOE. There's no hype about the Fed. There's hype about what's going on with the BOJ at the meeting on the 20th. So we can expect to see something. And I mean, you did see a comment out today. If you're looking at what happened in the market earlier today, Yeah, here, that little line was Hamada was like, let's wait for the Fed to do its raising, and that will keep the BOJ from having to do so much and get the dollar yen higher. I mean, not everyone's on the same page as that. They've talked about foreign bond buying. They need to sort of do some foreign bond buying. I don't know what the sidelines on the G20 meeting was discussing. I mean, they probably warned Japan, stop trying to intervene. Everyone's playing nice and you're just gearing up for another war. But, yeah, let's just see if the BOJ can deliver. That would be a problem. That would be a problem if the BOJ does not deliver on the 19th. It's pretty close. It's only like 10 trading days away. 19th, 20th. Let me get the exact date. Sometimes I'm a bit loose with the dates with you guys. It might be like the Fed, right? So it's the 20th, the Tuesday the 20th. The Fed is on September 21st. I keep on saying 22nd. It's 22nd because it's Thursday morning my time. That's the, that's when we're all up and running. Hey guys, how are you going? What are we're bagging Anton Creel again. What? He's saying you don't believe the $50,000 watches and the helicopters? Nah, he's alright. He's not the worst, man. He's not Greg Secker. Alright, but $20,000 type courses, upselling and bullshit, right? Promising you can become a full-time trader inside his hood. He's selling a dream. And it's very unlikely that the standard guy on the street can become a really serious, successful trader. Part-time trader, learning your strengths, picking one pair, making money over 10, 15 years, yeah. But doing a crash course in FX, learning his style of trading and becoming a full-time trader, successful trader after paying him $20,000 to learn his course is very unlikely in the first year or two. If you haven't seen crashes, you don't know what to do in crashes, right? So yeah, I mean, I don't want to bag out the guy. I don't know him. I know he spoke a lot of shit about Nick. Randomly, Nick said something on one of his YouTube feeds, and then he went berserk at him. He'd go berserk at me as well if he was watching. And that sort of temperament lets you know a little bit about the guy as well. So just quickly, before we look at some of the bank research, let's have a look at some of these trade ideas. I'm over at the Forex Signals chat room where you can ask questions. Put away the video. That's where I'm in. If you're watching streamers, there's a few streamers. Scheduled today is Josh Ryan, counter trend trading, and Josh for the New York session. Hide. I haven't looked at some of these ideas for a while, and hopefully the $500 competition is helping. Let's have a little look. Some people are putting out spades at 3. I think there should be only 1 per person on the main page, right? You can just literally you can do 8 and knock everyone off. Try to steal the limelight. Okay, what do we got here? Eurocad. Alright, I mean you need oil to fall for this to work. It's a pretty strong trend. You're picking a bottom. I mean, I don't know why the euro's going to rally, right? Maybe the ECB's looking like it's done. Euro rally and OPEC fails. So yeah, that trade could work. Okay, just buying with the trend. Nothing wrong with that. Off the trend line. It's good. It's good. Dollar yen short. Oh, jeez. It's keen. Why are we selling here? Technically. Or are you looking at this trend wave indicator down here? Hopefully it's crossed over by there. I don't know about that. It's very hard selling dollar yen. It's tested 100 twice, right? Tested 100 twice. My man Wings. Wings does some very good trades. 2 hours ago he got into the short 76.50. Okay. Pretty tight stop. Now, I mean, look, it is high, but it is grindy, right? So it's like, well, what's going to stop it? And it is pretty decent. I don't know. I think you might get stopped out here. It's the sort of trade I don't want to do. It's the sort of trade which scares me. I feel like it's just going to grind higher for the rest of the week, right? You're wanting a pullback, a pretty substantial one now that the market's showing a direction during the week. Data-wise, there's nothing really to stop it. If the US data is weak tonight, now remember the the US data, the US PMI data was shockingly bad, right? Like dropped like 3 points. So the PMI data might be bad too. Let's keep that in the back of your mind. That doesn't help this trade. So I don't know. I'm not trying to speak you out, but just be careful. It's nice level though. We're gonna like the Kiwi one, we'll like the Aussie and the pound. Pound. What are we doing? Buying on that dip. Yeah, I want to dip back to 132.50 as well. Oh, you selling? Oh god. You're a maniac. Alright, good luck with that. You're a CAD. We're in similar trade here to Refit. And channel trading system says buy. Okay, I like that level. Sort of. I mean, it's... Okay. I'm going to sell some technical system to you guys. Just make some money. Fuck it. Sometimes I can't hold my technical trading feelings down, can I? No, it's alright. It's alright. It works. It works enough to sell. It works enough to get hopes up. It's good to use in combination with the other. Alright, Dave West has got a very similar trade to Wings. Let's see what his reasoning is. Okay, I like this more. Fibs in the short term. Okay. Yeah, I get a like for that. Alright, so not bad little post, guys. I'll see if I get some time to do a trade idea on the pound or pound Swiss or something later. Euro pound probably is the safest trade out there. Alright, so let's have a little look here. The guys that are getting involved, we're going to have a look at this. Aussie Kiwi's my baby, right? And Aussie Kiwi's getting smashed in the last little while. Now, it was a decent attempt at a rally today. Did look like it failed already. But an important attempt anyway. Something to keep your eye on if you trade this pair. If it develops into the second wave here, I might be adding. Now I said I'm not going to add any more until the market shows some sign of bullish sign. This is the first attempt, and we have to see how it plays out. You do have some data out tonight that's very important for the Kiwi. It's a dairy auction, forecast to be up another 10%. So get the sneaking suspicion this is going down again. But it's still good to see there's a bit of two-way action. It's been a while since we had a decent reversal. Okay, this house is losing confidence. Deutsche Bank. Deutsche Bank has been bearish on the Aussie Kiwi for ages. So let's not read too much into that. And I'll look at pound Aussie in a sec, mate. But yeah, it's probably got some nice topside potential. In the race against the US dollar, the pound's got a lot more room to move here. Remove the Alright. What have you got to say, Deutsche? I'm reading this for the first time, guys. If you don't know the situation in Australia and New Zealand, we've both got housing bubbles. Mostly driven by Chinese money. And also record low rates and no recession in our countries for 20 years. Aussie had a big China-led commodity boom. Lots of miners earning 150k a year straight out of school. Oh, this is pretty economic. All right. So it's basically talking more about the slight differences in our current accounts. Just a little bit of extra weight on their little sell side. It's really nothing though. Don't read too much in that. I'm looking for the Morgan Stanley FX Pulse. Now, they did a nice little update on the pound. Also of note is that Goldman Sachs are looking for a September rate hike. Now, they're not the best, but the analyst who's calling for it's pretty good. We might have a little look at that, okay? After this, what's their justification for the rate hike? So they obviously don't read into the signaling by the Fed. It's not so much they haven't tried to tell the market they're going to raise rates, it's that the market hasn't believed them, and the chances of them doing it at 20% 2 weeks out, and that's just going to lead to a shock if they do it. So if they signal better, then maybe they could raise. Let's have a little look here. Pound. Alright. Pound has recovery potential from here as post-Brexit data have come in stronger than anticipated. Even the August house price index has firmed up again, joining with stronger retail sales and labour market conditions. Against this backdrop, the oversold but still yielding pound may bounce back. Still yielding means it's at 0.25% versus negative rates in Euro and Swiss and Yen. In the short term, pound may well be the best performing G10 currency, especially offering recovery potential against the yen, even against the otherwise strong euro. Yeah, alright, I like these guys. Alright, we can read these guys. I'm not going to read that bloody Deutsche Bank Aussie Kiwi going to parity talk. The current situation may leave the impression that Brexit risks were overblown. Yeah. Despite our short-term constructive pound view, we're not complacent about the post-Brexit risks. You shouldn't be, yeah. Now there was talk that they're going to do the article this year. Now that would be negative for the pound. All right, so I think it's going to be limited rebound, maybe 140. But this is very important. The positioning there on the pound, that's the commitment of traders report. Manufacturing PMI popping up, retail sales popping up. But look at the positioning on the pound, right? Record lows. So that means extreme shorts. So there has to be, look at the way it reverses when it reverses. 100%, if we bring up the chart, when those position reverses, there's a rally in the pound. All right, so what's it going to do? Get lower? It's not going to get lower. Too much. I mean, if this is not the short squeeze, there will be a short squeeze at some point in the next 6 months, right? As everything, timing is very important. I'm just expecting this to be the time. All right, so look, there's some interesting developments in the market, mainly with the pound. It is hard trying to find a clean trade at the moment. And look, we are hoping it's going to be that. Armin wanted me to look at pound Aussie. All right, so pound Aussie, we did talk a lot about pound Kiwi as being, the potential topside winner. Given that the pound Aussie's probably fallen back in the last 24 hours, it might be near some buying level. It's really not the sort of trade I like. I mean, why buy the pound Aussie when you can sell the euro pound? We just talked about the Aussie grinding up to 77. All right, I mean, that doesn't hurt the whole pound going to 135 level, but it just means this might be a choppy chart. RBA just out of the way. There's RBA risk is gone. So if Aussie does what it does, it just, if there's no negative news, it grinds higher. Yeah, I think this is a dangerous sort of way to play the pound long, because the pound long is not without risks. There could be some headline that comes out. There's a lot of headline risk. It could be like, we're going to do this. We don't care about the negotiations with the Eurozone. They'll give us a good plan, blah, 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 blah. So, yeah, I mean, it's not a bad level. It's pulled back, but I think it's going to be harder to get a clean rally on this pair. We're not at 170 anymore. Yeah, so yeah, just be careful on that one. If anything, it looks a little bit weak, right? All right, Armin. Hope that answers your question. Any other pairs there, boys? Hey, Potter. How you going, mate? I might read one more report and then call it a day. No use trying to overanalyze when the market is wrapped up like this, right? I don't want to repeat what I've said in the last couple of days. Don't want to go on at length about potential trade ideas. I mean, in terms of that, let's see if there's some report about this Kiwi data that's later tonight. It would be from New Zealand if there is. Oh, sorry, we said we're going to talk about the Goldman Sachs guys talking about why they think they're going to raise rates. We have moved up the probability of a rate hike at the September meeting to 55%, despite the low NFP number. All right, so the main reason is that they think Yellen signaled that if it wasn't terrible data, they're going to raise rates. Let's see what they say about the next question. What is it? What do they think that Yellen didn't mean December, not September? Okay, because it's Jackson Hole. All right. This is more interesting. When Chairman Fisher asked Steve Leisman on CNBC later, remember that Fisher came out a couple of hours after? And Leisman asked him, should we be on the edge of the seat for a rate hike next month? He answered, what the chair said today was consistent with answering yes. This wording sounded like a deliberate signal that both of them, not just Fisher personally. Okay. Many market participants believe that talk about September was only an attempt to create optionality. Okay, this is what we talked about here. They're just talking it up to not lose credibility and to give them the ability to raise rates if therefore the NFP came out really strong. And they say that the Fed's not sensitive to 1 month data. Okay. Wouldn't the tactics favour waiting until after December's presidential election? And they also believe it doesn't matter much. September or December will be basically the same impact. So they're basically saying the market's wrong with a 30% probability. Okay, so this is important. They're saying that 90% of all the hikes in the past have been at least 70% priced in on the eve of the meeting. So it is therefore very likely, if they are going to raise rates, they'll come out extremely hawkish between now and September the 13th, where begins the blackout period. So they've got literally 1 week left to get some speakers out. Alright, so you've got Williams, Rosaggreen, and Lacker left. Alright, well, what they're saying makes sense. It's just, I think they're wrong. But we're going to find out in the next 5 days. Yeah, they have to talk it up before the blackout period. So next week by Wednesday, right? When is it? Period. September 13. Next Tuesday. So that's... Yeah, I mean, that's a pretty good report. That's given me something extra I didn't know to do. Watch the Fed speech in the next 3 or 4 days. If they're right, we're going to get some announcement, something big that's run about. It'd be like, oh, what's causing this US dollar strength? And then it'd be, oh, this guy said this. Yeah, let's keep an eye out on this. Yeah, so the Kiwi's looking pretty strong, and it's rallying on the back of not just the weak US dollar, but also anticipation of tonight's GDP report, GDT report. It's the global dairy trade. Let me bring that up for you. Easiest would be on Forex Factory. Okay, so this See this huge rally in the last 2 times? 6% and 12% the last month, and the futures market in dairy is looking at another 10% rally. And when you get these events, it usually helps the Kiwi rally. And just as we're going into that announcement, Kiwi's testing pretty much the top end of its recent range. It's looking pretty strong, right? So yeah, I think it's going to break top side. But we'll see. We'll see. That comes out about 12 o'clock my time, so about 5 hours, 20 minutes. Alright, boys. Good luck with your trades. Keep an eye on this pound. Don't be afraid to get in. If you're a little bit worried about the US dollar, start to look at the euro pound here. Showing great signs of rolling over. ECB should not be something to be worried about. But I mean, obviously you got to watch it, see what they've got to say themselves. But I don't think there warrant any urgent action. It was such a non-event last month. All right, guys. Good luck with your trades. We'll be back tomorrow at 9 GMT for another update, and hopefully we've got some updates here on the pound rally. Trade safe.